Hey everyone, Couch Investor back with another video for you today. So in today's video, we're going to talk about Teladoc. It's been a while since I've covered this company. I think the last time was a couple of months ago. If you want to watch that, it's going to be in the top right corner. I discussed Teladoc and Livongo as a whole. In this video, it's just going to be a little bit of a refresh because, well, it's been a while and the social sentiment around the company has died down. They also expected to report earnings this week, so stay tuned for that. So in this video, we're going to discuss again what Teladoc and Livongo are doing, the potential market for that company, earnings, bit of the graph, and of course, let's see if ARK Invest still holds a lot of Teladoc shares. But before I do so, I just want to thank everyone that has been subscribing lately. If you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, leave an early thumbs up as it really helps me outgrow the channel and get my videos out there. I would also like to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Right, so quickly looking at the graph, like I said, the highs were at $300 or so mid-February. Since then, the stock has gone down a lot, mainly because, well, earnings weren't that incredible, and that's also why the social sentiment around this stock has died down a bit. Now, yesterday, the stock has gone up pretty nicely. This pre-market indicator here is a bit wrong, but yesterday the stock has gone up from $180 to $190. So maybe someone knows something we don't, but overall I do see this area here as a good accumulation area or as an opening play if you still haven't opened a position in Teladoc. A disclaimer, I do not own any Teladoc shares. I own ARK Genomics ETF, which Teladoc is the #1 as we will see later in this video. Right, so like I said, last year Teladoc bought Livongo for around $18.5 billion. The overall market was pretty surprised because most of us thought that they maybe overpaid for that deal. But in the long run, I think this could pay off for them. Right now, Livongo is probably the most exciting part of Teladoc because, well, Teladoc, if you don't know what they're doing, Teladoc is basically this telemedicine company where you can book appointments to see your physician, your doctor, and you don't really have to go physically to the doctor's office or your physician's office or whatever. Obviously, with the pandemic, this has been accelerated and the growth of this company as well. More and more people got exposed to telemedicine, whether it's Teladoc, Amwell, or any other competitor out there, which one side is very, very good because more people get exposed to this experience. On the other side, you could see this die down this year and the next years to come. In my opinion, this won't be the case because we will see it right now. There's been a study a couple of years ago where the results were that the average total time per visits when you go visit a doctor or physician was 121 minutes, with 37 minutes of travel time and 84 minutes of clinic time. The average opportunity cost per visit was $43, which exceeds the average patient's out-of-pocket payment. Yes, this study was done a long time ago, but the main point still stands till this day. You have to take probably a day off of work, or if you're in school, you have to take a day off of school, which probably you like that. But overall, you waste a ton of time by just visiting your doctor, whether it's travel time, whether it's waiting time there. And the opportunity cost is there as well. As we've seen there, $43 is not a small amount. When you can just spend 5 to 10 minutes of your time, not waste a day or not take a day off of work, not take a day off of school or whatever. Open your app, open your phone, your computer, jump on a Zoom call, let's say, with your doctor or physician, and you're about done. After that, obviously, the doctor can prescribe medicine that goes directly to the pharmacy nearest to you. So there's no real time wasting there. It goes directly from you to the doctor prescribes it, goes directly to the nearest pharmacy. You go there, they already know what you need. It's done, over and out. So this is obviously the Teladoc side of the business, which is fine, which is nice. revolutionary in a sense, but Livongo goes a couple of steps further. It takes that to your home because Livongo is sending you signals and monitoring your chronic diseases. Let's say you have an elevated heart rate, so you probably get a notification from the app or the tablet, whatever you're using, and saying, look, relax, take a breath, take a seat, drink some water. Also, if you don't feel well, you can book a visit. The doctor will get all the info that is needed because this info is getting collected when you're using one of Livongo's devices. So when you jump on the call, there's no real time wasting there. The doctor knows already everything he needs to know. Obviously, you can add more information, but at least the full picture will be there. Livongo's technology can also predict if something bad can happen. If you're not moving so much, if you're sitting down, if you're not eating healthy or whatever, it can also predict if something bad is going to happen in the next couple of minutes. And this is why most people are super excited about Teladoc and Livongo, because this data analytical side of the business is pretty exciting and the market for that is pretty big. Now let's say the diabetes market. We can see that the digital diabetes care market will be worth $742 million in 2022. That would mean a 50% compound annual growth rate since 2017. Where will those revenues come from? From bundle sales, technology licensing, service and device sales, app store revenue, and advertising and promotion. So I hope that by now you remember a bit what Teladoc and Livongo is all about and you're a bit excited about this company's future. Now let's quickly look at their Q4 earnings and then jump into ARK Invest Holdings. So Q4 revenue grew 145% year over year to $383.3 million. Total visits increased 139% to 3 million. Full year revenue grew 98% year over year to $1.09 billion, and total visits increased 156% to 10.6 million. Obviously, this was thanks to the pandemic, because most of the time you couldn't even go to your doctor physically, you had to do this digitally. Now they also said that over 40% of Fortune 500 companies are using Teladoc, which is always nice to hear. Alright, so for first quarter 2021, which is for this week, so you can compare the numbers, total revenue to be in range of 445 million to 455 million, EBITDA to be in the range of negative 46 to negative 47 million, total visits to be between 2.9 and 3 million, which is approximately what we've had in last quarter, just revenue will be, I think, almost 30% higher. And for full year 2021, they expect total revenue to be in the range of $1.95 billion to $2 billion, almost double, and total visits to be between 12 to 13 million, so a 20 to 30% increase on that front as well. So they do expect to grow pretty aggressively this year as well. It remains to be seen, obviously, if that growth can be sustained because, well, we're still in that pandemic trial period. So we'll see how that goes. But now let's quickly look at ARK's holding and conclude this video. Right, so first up, we have your ARK Genomics. So the number one holding is obviously Teladoc at 7.11%. They hold 3.7 million shares, which are worth close to $700 million. Next is ARKK. Actually very surprised to see Teladoc number 2 here right now at 6%, holding almost 9 million shares worth close to $1.5 billion. That means that they've recently taken the spot of Roku and Square because, yes, I think ARK has been loading up on Teladoc on its way down. So obviously this happens. And the last one is ARKW. We can see that Teladoc sits here at number 4 at 4.26%, holding close to 1.6 million shares and a market value close to $300 million. Right, so it goes without saying that ARK is still very bullish on Teladoc. Are you still bullish on Teladoc? Let me know down in the comments below. Overall, we can expect growth to continue, in my opinion, but stay tuned for earnings later this week. It will tell us the full story. But overall, let's think about it in a logical way. Would you rather waste 120 minutes going to a doctor, or would you rather take just 10 minutes of your day and do that digitally? I think the answer is pretty simple, in my opinion, unless you want to take a day off of work or a day off of school. Now, that will be it for this video. Let me know down in the comments below what you think about Teladoc. What do you expect Teladoc will be reporting in their next earnings report? Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.